So once the entity is formed, startups begin to start thinking about how am I going to get some money in to actually get the operation started. So what options are available to the majority of startups to get that initial seed capital that they need?
There are various variables to this question, and it really depends on the amount of money you need to get started and start generating the income. There are various options available in terms of the lending and investment, but the most crucial thing is to have a very solid business plan and a risk mitigation strategies. What most of the investors or the lenders would look for is that how and you've addressed the risks in the business and a strategy you've developed to mitigate that risk and start generating a solid income going forward, because that's what they're looking for in terms of the return, not only return, but the protection of their capital as well.
Okay, so providing that you've been able to satisfy sort of the risks that are available and the investors you would assume are happy enough with that plan, what sort of strategies or options are available for funding for startups?
Well, traditionally everyone looks for a bank finance to begin with, but it's normally very difficult to secure a bank finance for a startup because the banks would normally look for a security against a loan, and the startups probably won't have a security to offer. They also look for a minimum 12 to 24 months of your ABN operating, so you need to have a bit of a history. The banks can lend unsecured, but only for recognized franchisees or professional services like doctors and lawyers. So it's normally difficult. You can rely on the credit card sometime, but again, you need a history of 12 to 24 months operating. For a business credit card, you can draw a small amount from your personal credit cards if you've got a very low need of the capital to start out.
What about if you've got a home owned, and you've got equity in your home? What about then? Are you able to get some financing from the
Yes,
bank?
definitely. If you have some equity in your house, which is if your market value is more than the mortgage, you can actually draw down up to a certain lending ratio the banks would go for. But you're really putting your house on the line, and have to make sure that you have a solid business plan and risk mitigation strategy, so you're able to meet the loan repayments. Otherwise, you can have a foreclosure and be in a difficult position.
So beside the banks, what are some of the other funding options available to startups for that seed capital?
There are many options. To start with, incubators these days are popping in everywhere. Now, incubators could lend you from $10,000 to $50,000 for exchange of some equity in your business. Now, the good thing about the incubators is that they can offer some mentorship facility as well, because normally they work very closely with the promoters of the business, and they help you in actually the operational aspects and the growth aspects of the business as well. And the startups can actually operate in the incubators as well and get some technical support to operate as well.
And what about crowdfunding? I know that's becoming a very popular option for a lot of startups, but I know that it's also not just for everyone. What about crowdfunding in your opinion? Is that a good option for startups?
It is a good option if you're operating at a small scale. Some of the people have really gone and raised big money on the crowdfunding. Some of the popular websites are Kickstarter and Indiegogo, but you really need to have some kind of a product or a service to offer in exchange to the people who are investing in your business, because there is no exchange of equity in case of a crowdfunding.
So not everyone will apply for crowdfunding, because obviously you need to have a product or a service that the market on Kickstarter or Indiegogo are willing to prepay for, so you can get that initial capital. But what about things like sweat equity? Because while that's not actual money that's coming into your bank, I know that's one of the most popular options for startups when they're initially starting their organization.
Sweat equity is quite a good option. Now, normally how the sweat equity operates is that you need to approach someone who you need the service or a product to actually start your business in exchange for equity in your business. Now, that person really needs to buy in the idea of your business, because they're risking their capital on your business. So take an example where the startup really needs a lot of technical development or a web development or a professional service or a legal advice where they're developing an intellectual property, and they cannot afford to pay that money. So they would traditionally go and raise money or some equity, which is not an option for them. They can actually talk to them and discuss if they're interested in their business, and if there's a good potential, they would exchange their service or a product for the equity in your business.
And that's a little bit similar to angel investing, where but they actually will give you the capital. So can you tell us a little bit about angel investing and if it's a really good option for startups?
Angel investors has helped quite a few big names like Yahoo and Google, but they really high net worth individuals or businesses who are looking to invest in your business for a decent return or exchange in the equity of the business. But you really need to have a very strong business plan with a risk mitigation strategy to attract the angel investors.
What about business grants? I know that they're out there. Do they sort of help a lot of startups get off the ground?
A lot of business grants are available, and the government actually tries to promote them through various modes and publicity, because a lot of small businesses or the startups are not aware of the business grants. Various government websites, Aus Industry is a very good example. If you go on Aus Industry, you actually get a lot of information about the business grants available for the startups in different spheres, and that could be literally for the whole business plan or an idea, or for funding certain type of assets you need to start up the business. It could be your initial, by investing in the IT equipment or the computer. So the small assets for you to get kick-started. So you should definitely, as a startup, look at Aus Industry for various business grants.
One of the most romanticized ideas of when you're in a startup, I mean, there's a lot of TV programs that sort of show that this is something that is a normal part of funding, which is the venture capital, and be able to secure money in that way. How probable is that an initial early form startup's going to be able to access venture capital funds?
Venture capital has always been a buzzword with any startup business at a small or a large scale, but it's very difficult to secure a venture capital funding as a seed capital or at the start of the business. They normally get attracted at the expansion phase of your business, because they have a little bit of a confidence on your product or an idea which you've already developed. But if you have a really good opportunity and well presented and there's a lot of potential, they might come in and have initial seed capital with options to invest at a later expansion phase.